SoftBank's massive bet on artificial intelligence is starting to worry investors. Credit markets are flashing warning signals as the company pours billions into artificial intelligence infrastructure. So what's happening? What does this mean, Niniola? SoftBank's 5-year credit default swaps, a key measure of credit risks, have widened sharply to their highest level in nearly a year. The move signals growing concerns amongst investors about the company's financial exposure to artificial intelligence. At the center of the concern is SoftBank's aggressive investment in OpenAI and the massive Stargate AI infrastructure project. Stargate was announced as a plan to build huge AI data centers across the United States, with total investments targeted as high as $500 billion. But progress on the project has been slower than expected. Reports say that the rollout has been delayed by disagreements between partners and uncertainty over financing and the data center locations. At the same time, SoftBank has dramatically increased its investment in OpenAI, including a $30 billion commitment that has raised questions about liquidity and leverage. Credit rating agency S&P recently revised SoftBank's outlook from stable to negative, warning that the spending spree could weaken its balance sheet. Now, investors are now watching closely to see whether SoftBank's huge bet on AI infrastructure will produce long-term returns or increase financial risk. So here's my take on what this means for the AI economy. So SoftBank has always been a high conviction investor, which famously made one of the most profitable bets in venture capital history, which was Alibaba. But this strategy has always shown the risk of betting too big, too early, as we saw with WeWork and parts of the Vision Fund. Now we're watching the same pattern with artificial intelligence. AI infrastructure is expensive. Training advanced models requires enormous data centers, specialist chips, and a massive energy consumption. Someone has to fund and build out, and someone has to fund that build out. And SoftBank is trying to be that capital engine. The question investors are asking is simple. Is this the next WeWork? So if you're a founder, there's a strategic lesson here. Infrastructure booms create huge opportunities, but they also create financial excess. The companies that I believe will win this phase won't be the ones spending the most money. They'll be the ones turning AI into real sustainable economic value. And if the race to build AI infrastructure is accelerating, the next story looks at who's controlling the chips and computing power behind the AI revolution.